London AIM-listed Trident Royalties is a growth-orientated, diversified mining royalty and streaming business. Its royalty interests are already producing income from iron ore and copper assets, and its recent acquisition gives it a cornerstone asset in the gold space. Adam Davidson is Chief Executive. He joins us now from Denver. Adam, good to talk to you again. When we last spoke to you, you explained at length about the royalty business and indeed have changed the company's name from Trident Resources to Trident Royalty recently. So we can move on from that. Despite the restrictions, you've reported good Q3 revenues. The restrictions, of course, I'm talking about COVID and the coronavirus. It's closed some parts of the mining sector down. And also you've told investors you feel pretty happy where you are about Q4 when you're due to report that. Just give us an update as to how you're developing the business.
Yeah, sure. No, it actually took me a little bit by surprise when I looked at the last time we spoke. We just had the single iron ore royalty, which is a nice producing royalty on an iron ore asset in Australia. And since that time, we've announced 4 more transactions. So we now have a total of 8 royalties. As you said, we have the producing iron ore royalty, and now we have a producing copper royalty as well. And then have added quite a bit of gold exposure, and a couple of those. One is sort of commenced construction on the broader project. We don't have a royalty over the entirety of it, but the broader project has commenced construction. And then the other gold royalty that sort of stands out as a keystone asset is over the Lake Rebecca project. And this royalty is over the entirety of the project. That's a plus million ounce deposit. And they continue to drill it furiously, and so it's moving sort of on the same trajectory of we'll be in production here in the next few years as they move through that cycle. So yeah, from our perspective, I think when we last spoke, it was we had this strategy to build out a portfolio that's representative of the mining sector and would generate revenue and ultimately pay investors a dividend, so they have their exposure to mining commodities from a royalty perspective. And since that time, we now have base metals, precious metals, bulk commodities. We're generating positive cash flow. It's all moving in the right direction.
I don't want to put words into your mouth, because I said at the top you had these relatively good numbers in Q3. It was only small by sort of maybe some competition comparison purposes, but you are hoping for better numbers in Q4. Explain what's going on that's giving you that sort of confidence to put that sort of word out in the market.
Oh, sure. Yeah. So, I mean, I think our largest asset or cash flow generative asset is our iron ore royalty. And we acquired that for 6.65 million Aussie. And through Q3, so just in the first 3 quarters, it's paid us back 2.1. Of course, we're tracking the shipments out of the Esperance port in Australia, and you can't zero in on exactly how much is coming from your specific tenement, but you can see that the shipments are up pretty significantly over Q3. So we're cautiously encouraged to see that. And then our paying copper royalty, it had an initial small payment for Q3, but we are aware that production from October, it exceeded the entirety of Q3 a couple times over. Sorry, more than 3 times over. And that was just for October. So it's good to see that asset is accelerating its ramp up and its production profile. And next year it kicks in sort of into high gear. And we also see the initiation of a minimum payment schedule. So starting in Q1, that royalty has to pay a minimum of $375,000 US per quarter, and then that increases to $500,000 in 2022. So we're seeing the profile of that asset increase as well. In addition to, as I said, some of the development assets, the operators of those assets are out there. They're raising money. They're reporting good drill results. We're seeing everything sort of moving in the right direction to where, in a couple of years' time, you'll have more revenue from more royalties.
And of course, the thing is, you're selling into quite a buoyant market as well, aren't you? I was talking to clients this morning, IG clients this morning, about this 30-month high in the price of copper. I mean, it couldn't actually be a better story for you, could it really? The background is really encouraging. I know you're not a mining analyst, but just give us your thought on the outlook for copper and iron ore prices, base metal prices generally, and how this is going to play into your quarter.
Yeah, no, you're right. We got, I won't call it luck, but we've done pretty well with regards to the timing of some of these transactions. Because when we did the iron ore transaction, I think iron ore was hovering in the mid 80s, and it's now around kind of 115, 120 per ton. Similar with copper, when we did the deal, it was around 5,800 per ton, and now it's kind of hovering just below 7,000 per ton. So we've certainly gotten the timing right. But I think more broadly, with regards to the commodities that we're most bullish on, base metals probably does sort of tick the box there. We've already seen a nice spike in gold, and it may still have some room to run, but I think base metals in particular, copper, we've now seen a bit of a run, but some, zinc, lead, nickel. I think some of these other base metal commodities, there's still a bit of scope there. Similarly with the battery minerals, they were all sort of kicked in the teeth a little bit over the last kind of year. Prices really got a bit frothy, and then came back down in a hard way. And then COVID didn't help the battery mineral space, because people just saw delays in the uptake of EVs and that sort of thing. So it didn't sort of destroy that narrative, but it did delay it somewhat, and that's then reflected in the commodity prices. So getting royalties over sort of assets in those commodity buckets, I think, pretty high priority for us at the moment.
And of course, one of the other things is you're doing at the moment, as you said at the top, you're moving into the gold space as well, the precious metals. And of course, this is another thing that's playing into current market pricing. How far into this space are you? Because my understanding is that I think if we're talking here about Lake Rebecca? Because that's an exploration project, isn't it?
No, that's right. I mean, and as a bit of background, our intent is to have a portfolio that's about a third precious metals, a third base metals, and a third bulk commodities and battery minerals and everything else, because that gives then a shareholder Trident rough representation of the sort of full suite of mining commodities. So we do want to have an allocation in sort of all buckets. I guess the real benefit that we have being diversified relative to most of our peers that are precious focused is they've got this sort of unsavory option of going out there and writing new royalties in the precious metal space when gold's running hot, and the value just may not be there, or sitting on their hands for the next sort of 12 to 18 months, which isn't palatable to a publicly listed company either. So we could pivot to other things, or we can look at development stage gold assets, because paying for a producing gold royalty at the moment, well, you'd be overpaying. So, we've got this nimbleness that our peers don't necessarily get to enjoy. So yeah, getting exposure to Lake Rebecca, we saw a lot of good value there. We paid around $5.5 million US for that, with a chunk of that in Trident equity, which was encouraging to see counterparties now sort of treating the equity with some real value. But that gets an asset in that, you're right, is sort of late exploration stage. They flagged their kind of 18 to 24 months from construction, have now said that a couple of months ago. They continue to drill it. They're releasing results sort of almost every week. But yeah, you'd see that asset coming online. We anticipate sort of in the 2023 timeframe being sort of a 90 to 100,000 ounce producer. And in fact, their latest sort of update, they flagged that they'll initiate study work once it looks like it'll have that kind of profile. So I think we're all sort of generally aligned with how that asset's going to take form and take shape. It's a standalone project on the resource as it is today. But as they continue to grow, and you continue to see that grow at spot gold prices, it more than pays for itself pretty quickly.
Yeah, just tell us how a royalties business gets involved with the build of the mine, because building a mine is very, very expensive. Between where you are or where the company is now and when it starts to produce and pour gold, that first pour is actually very, very expensive, let's face it. Do you get involved, or does the investor in Trident get involved in the cost of that, or do you just stand back and then just take the profits as it comes through in your proportion?
Yeah, it's really the latter, and that's really the beautiful thing about royalties is you sit back, and if they have cost blowouts on ramp up and they have to draw more debt or raise more equity to get the asset into production, that's kind of not our problem. We sit back and we get our percentage of revenue, and we get that in perpetuity over that tenement. Any ounce that gets mined from there and processed and sold, we get our percentage of it. And in fact, in this particular royalty, we bought it from a private party that had pegged that ground many years ago and retained a royalty. So in this case, we're not actually even funding the miner directly. We were acquiring a legacy royalty that was sort of a bit forgotten. So to get that asset, and then in a couple of years' time to start receiving revenue for it from a long life asset, that's really the name of the game and what we're out there doing.
How are you finding life in London as an AIM-listed company? As again, back to what we spoke about earlier on in the summer, where you explained more about this sort of royalty business. It's widely appreciated in North America, but how are you finding things in London? And in terms of finding money, for example, I mean, how are you relating to people in London, investors, and your business model?
Yeah, when we listed, that was one of the big questions was, the model is very well proven on the TSX, so why not list in Toronto? And I think that answer is now getting easier and easier for us. So, London started the year with just one mining royalty company, and then we listed. Now Wheaton, one of the very big boys, has done a dual listing in London, so they obviously see value there. And then the Ghanaian government is looking to list their portfolio of gold royalties in London after their elections in December. So soon to be and that's going to be sizable. Sort of, they're targeting 400 to 500 million sort of IPO. So yeah, soon to be 4 publicly listed mining royalty companies listed in London. So I think the model sort of is proving itself enough, and I think London's fertile enough ground that there is opportunity there, and then couple that with the fact that as we've been announcing deals, we see the share price move up. So we started at 20p when we IPO'd in June, and as of today, we're sort of hovering around 31, 32p per share. So we're seeing good share price movement. We're seeing good liquidity, most importantly. Actually, when we do analysis and stack ourselves up on an annualized basis relative to our peers, we're right there alongside the majors and mid tiers with regards to the amount of the register that we're turning over on an annualized basis. So we're seeing everything we need to see. Obviously, time will tell a bit further, but of the first sort of 5 to 6 months, it couldn't have gone better, to be honest.
Yeah. So what else is in the pipeline apart from what you fully expect to be a robust fourth quarter? What's next fiscal year looking like for you?
Yeah, I mean, our priority, we've always said, is to build up cash flow. There's this finite opportunity where in the precious side of things, there are quite a few precious TSX listed mining royalty companies, and they've gone out there and they've mopped up a lot of the attractive gold royalties, particularly in North America. And we're finding the occasional ones like Lake Rebecca that are, it's in Australia and kind of underneath the radar. But for us, really the big prize is the fact that nobody's done this in the diversified space yet in a meaningful way. So there's literally hundreds of royalties out there that can be consolidated into a diversified mining royalty company. And we recognize that opportunity may not be around for others are going to sort of start to pick up on this. It has its genesis from the fact that mining royalties became part of the mainstream segment of mining finance in North America and funding precious metals projects. So they've had their genesis there, but it is growing and broadening and going more global and being more diversified. And we're sort of at the forefront of that. So we want to make the most of it before competition does intensify, because it's sure to down the track.
My understanding as well is you've got a new CFO that's come in recently, and also I believe an economic geologist. I've never heard of an economic geologist before, but you've bolstered the economic team with a new member. What do these people bring to the team?
Yes, we've got a 4-person team now, which speaks to sort of the scale that you can build in a royalty company. We don't anticipate adding to that team in the near future. I think that the 4-person team is sort of what we have and what we can. Well, it's just really ticks all the boxes with regards to what we need with regards to building the portfolio. But it all sort of circles back to the fact that mining royalty companies, you're not operating mines. And so it is a very scalable business. As you add royalties to the portfolio, you don't need to add tens of or dozens of people to the team. So yeah, we've bolstered the board. I think the board is now in a good place. And as you said, we had added Helen, who's an economic geologist. We've added a CFO. Now that we've got revenue coming in from multiple jurisdictions, it made sense to bring that in-house. Probably important to flag that all these tasks were outsourced, so we weren't paying for them. So bringing them in-house in some areas is actually a cost savings. But yeah, we've now got the team in place. We've got sort of our base portfolio in the sense that we've got cash flow. We're cash flow positive. Proof of concept is now there in the strategy. So really, we're pretty excited about 2021 being sort of a transformative year for us.
Yeah, we'll look forward to talking to you about that later on as we set out in the new year. So I'd love to have you back on, Adam, to see how things are going. But in the meantime, I hope you have success for your fourth quarter, and we'll be looking out for the headline numbers as they come through. Great to talk to you again. Thanks for your time.
Likewise, thank you.
That's Adam Davidson. He's the Chief Executive of Trident Royalties.